Right, welcome everyone to Marketwise Traders. So today we're going to continue with the series of how to trade like a pro. This is basically psychology and mentality of trading, which is very important besides the strategy which we have. So just read this risk disclaimer before we start. Right, we've read that. Okay, so we're going to look at how to approach the market, right? How to approach the market. So when I say how to approach the market, I'm meaning from a mental understanding point of view. Besides having your strategy and all that, I believe you'll have your strategy and all that kind of thing. If you don't have a strategy, like I said, just go to marketwisetraders.com. I got many books on different strategies you can take if you don't have one. Myself, I use the market maker method mostly. But anyway, so to approach the market, these are the 5 points which I want us to look at. Is how do we make money? Seems pretty straightforward. Who controls the market? Patterns and probabilities. And then, of course, most importantly, the probabilities approach and what we need to know. Okay, what we need to know. So let's just get into this, right? And this will help your mindset and your mentality in trading. Okay, so how do we make money? I think most of us, we already know this. Basically, in order to make money, you have to buy when the price is low, right? If this is our price, this is our price here, you have to buy when the price is low somewhere here. This is where you're going to buy, isn't it? And wait for it to go up. And naturally, when you're taking profits, you're actually selling. So you want to sell when it's high. So you sell when it's high, and then you're gonna buy back when it is low, isn't it? And then you enter a sell again when it's high. So basically, whatever you're trading, we all know that the only way in which you make money is by buying low or by selling high. But now what happens is that what you see as low, someone else can see as high, isn't it? And what you see as high, someone else can see as low. For instance, what am I saying? Let's say you have this chart, and let's say we've had this pattern continuing, going up, and it reaches somewhere here, and you might think to say, okay, I must sell high, right? But to someone else, this price point, whether this is say $1.10 or something, let's just say whatever the price is, if it's $1.10, something there, this is where price is there, and you are saying this is high, I should sell. But if there's someone who has got more muscle in the market, or there's more people who are saying no, that is actually not high, that is still low, but you might be seeing it as low in your time frame that you're in, but someone else is actually seeing this as I mean, you might be seeing it as high, but someone else is seeing it as low, and then all of a sudden price will just shoot up like that, isn't it? So buying low and selling high is easily put, but what you see as high, someone else might see as low. What you see as low, someone else might see as high. So it's all about who it is and learning how to follow the market, right? So we'll get into that, especially if you want a strategy. But anyway, so to make money, it's very easy to do this once off, with one winner or even a couple of winners in a row. It's very easy because trading, all you need to do is just have an account, not much regulation. If you just have an account and you just get in there and you just click buy, whether there's no pattern or whatever, and the trade goes your direction, you could have made some money there without even having any strategy. So once off, you can do this amazingly. You can make a lot of money on once off trades, or even maybe a couple of trades, right? So it's very easy to do that. But now, the main thing which we're looking at is to do this on a consistent basis. So to do this consistently requires skills. It requires the technical skills and the mental skills. So the technical skills can pretty much be taught easily, and you'll get them regardless of whichever strategy. But the mental skills, it just comes in point like when you talk of like sport, like football, for an example. You can have a really talented football player, or even many football players who can do amazing things with the football, but in soccer or whatever. But when it matters, that experience, that's why often like in soccer they say that you cannot win anything with kids. You cannot win anything with kids unless, of course, if those kids have got the experience of doing it at a big stage, at the big time, right? Okay, if they have the mental skills. So to make money in trading, you not only need to have the technical know-how of identifying patterns and following your strategy, but the mental skills is even more important. That's what we're looking at more in this series, the mental skills. Because, for example, someone can if we talk of like in terms of a penalty kick in football, you understand, you have that penalty spot there in football, right? And let's just say during his practice session, this football player can score this penalty probably 99 times out of 100. 99 times out of 100, he's going to score that penalty, right? But now, if we say it's the World Cup final, and this is the last penalty to win his team that World Cup, right? And he's up against that goalkeeper there, and it's the last. If this penalty, if he scores it, he's gonna win the World Cup for his team. So what happens is 99 times out of 100 in practice he can do it, but now we're saying this is the final of the World Cup. If he scores this, his team win the World Cup. You know, it's going to require, he's got the technical skills and the know-how. He does it 99 times out of 100, or even saying 90 times out of 100, he's going to put the ball in the back of the net. But now he needs the mental skills in this big game situation to be able to do that, to score that goal, right? So the same thing is likewise in trading, is that in your demo account or back testing 90 times out of 100, or maybe even lower than that, maybe you could say 55 times, or even 65. I mean, out of 100 times, you'll be right on a trade. You can even say 65 times out of 100, you'll be right on a trade. That's how you find yourself making money on demo trading or back testing. But now when it matters, when real money is on the line, do you have the mental skills to convert that penalty? So that's exactly the same thing what it is when we're talking about these mental skills. Okay. So that's how we make money, is you just have to buy low or sell high, but you need the skills, right? So who controls the market? So there's no one who truly controls the market. The market is just moved by buyers and sellers. What one person, like I just showed you, that what you think is what you may perceive to be low, someone else may perceive to be high, isn't it? For instance, if we have a pattern like this and you perceive this to be low, you want to buy. But if someone else perceives this to be high, whilst you want to buy, they can sell. That's where you'll see the chart do something like that, isn't it? So no one really controls the market. It's just people who are buying and people who are selling. They are the ones who move price. But now we have got institutional traders and we have got retail traders. So most of us are retail traders. But the ones who have a stronger influence and the ones who do a lot of fun and games is the institutional traders or the market makers, right? So these are the guys, just like Wyckoff, who earlier on, early 19th century, he spoke and he said, he called it smart money. And he said, you must think of trading as it being controlled by one composite man. So this is where we get the market maker method. And this is where we see patterns. So what happens with these guys, institutional traders, is they have got larger amounts of money, isn't it? So they can actually move price a certain direction. So what they do is they try and move price to try and validate certain patterns. Like maybe if you're looking for a double top or something, or M, they can move price to present this pattern. They present this pattern when in fact all they want to do is to go long. But they present this pattern as if it is a resistance, and they don't really control the market, but all what they're doing is they have the buying power to move price to break through this zone. So they can just move price slightly to get there, and then once everybody comes in and piles up sell orders here, then they take them out and they make more money by pushing price just a little bit. Once they break that zone, if they just break there, then everyone else will buy and go long. So they don't actually control the market, but they do have a strong influence in playing with the mentality and that. But all it is at the end of the day, it's people's response to price that moves it. And where we can see it, for those who think that institutional traders have full total control over the market. If you remember, there was this issue with this stock, with this stock called GameStop, right? Where retail traders put the price of that stock up. They put it up so much that institutional traders were being hit because institutional traders were trying to sell that stock at that moment to buy it at a cheaper price. But because the retail traders joined together and they pushed that thing up, it kept on going up, such that they even had to halt trading, and there was a whole lot of stories. But you can see that there's a bit of question marks in trading. But all you need to do is to follow people's response to trading for you to make money, right? So there's not really anyone who actually controls the market, but there are those who have got a stronger influence, your hedge funds and that. But you just need to be able to flow and follow the response of people, right? So as a retail trader, you cannot move price. By you risking your whole account, you're not going to move price. Institutional traders can do that, but yours is just to see what these guys are doing and follow them. Okay, that is the best way. So there are patterns. All right, point number 3, there's patterns and probabilities that take place. So a pattern is just like, I'll go back to the example of sport, or even anything else, even like foodstuffs. There's seasonal food, and you find when that food is in season, you find it's cheaper. When it's out of season, it's more expensive. So that's a simple pattern which you can see that around those months, the cost of that thing is cheaper and more expensive when it's out of season. So that is people's behavior. People's behavior to something. It's like if something is in demand, people's behavior, we expect the price to go up. So even in trading, the behavior of people will represent a pattern. So trading is not charts. You see, it's just that in this era, we've been introduced to it in terms of from the computer screen and that, and accessing it in that kind of way, in a digital way. But trading is actually, it's just buying and selling, right? And then we see this on charts. So even if it's currencies or whatever it is, whatever is going on is people who are actually buying and selling something, which is causing it to present some kind of a pattern on the chart, isn't it? So we use these patterns to get a probability so that we can have an edge or a strategy over the market, right? This is what we have to do. So remember this. This is why an edge or strategy, it will not always work. It will not always work. It's just giving you a higher probability to say, usually when price drops and comes down to this place and you see it holding, your strategy can say, okay, it seems like it doesn't want to go lower. There's a higher probability that price is going to go up as opposed to it going low, isn't it? So this is all. You've seen this pattern. Maybe you've seen it happens. It's been happening for the past 10 years. That after you see such kind of a pattern, whatever your pattern is, according to your strategy, it's been happening in the market, so on and so forth. It's not because of the market that's doing it, but it is the people's behavior that is regenerating this kind of pattern. So if the pattern fails, it does not mean that your strategy is useless. It could be just at that point in time, people decided to respond in a different way. Okay, but we use the patterns which the market shows us over a period of time, over some months or some years, to give us an advantage. If we say that every time when price, like you have your head and shoulders, you say normally, what are you saying with the head and shoulders pattern? All what you're saying is that price made a low, it came and made another lower low, but when it came the second time, it didn't want to go back down to that further low. So you're expecting that when it gets here, somewhere here, this is an inverted head and shoulders, you're saying when it gets somewhere here, there's a higher probability that it will go up, because we've seen this happen many times in the market. But it does not mean that price can turn there and continue down. Okay. So patterns, they're just there to give us an edge, right, on the market, to give us an advantage. So when you approach trading, this now is the key part, point number 4 and 5, where I want you to get this in your mind. It's not just about finding a winning strategy and putting everything on that strategy when that one setup comes up, but understand that trading is a probabilities numbers game, right? And this is how you should approach trading, and realize that every moment in the market is unique. What do I mean that every moment in the market is unique? Every moment is different. If yesterday, for example, let's just say we have, these are different days. These are different days. I'm using the market maker here to show you. So let's say we came here yesterday, we got a type 1 of a trade, something like this, right? The trade, yeah, okay. So the story should be actually further down there. Let me just restart this. So what I'm saying is, for an example, let's use an example, that if yesterday price came like this is your Asian session, price came like this, Asian session, right? Opened, came, it gave you an M, type 1 of a pattern, came down, came and closed the day maybe even at the same price, right? So yesterday this was unique, this was a wonderful entry. Just because on this day price comes here and does this again at the same high, yes, it happened yesterday like that, but it does not mean that today the same thing is actually going to happen, isn't it? It can happen, but it doesn't mean that it's going to happen again because it happened yesterday. So every moment in the market is unique, isn't it? Just because last time price came and hit that point, it does not mean that this time it's going to come and hit that point. It's a different day. There's different traders. You don't know if the traders who sold at this point are still willing to sell. Maybe they took their money here. They were happy, right? Down here, they were happy with their money. They took their money and they are now out of the market. And you are now coming in saying, oh, well, the last time it hit here, these guys sold. Maybe these guys have made their money. Those big boys who sold, they are not in there again. They're not interested. That's why every moment in the market is unique. Just because it happened last time doesn't mean it will happen again. Okay, so that's why your strategy at some times can fail, because maybe at times those guys who buy there, or the ones who play that trick, or whatever the reason, people don't respond to buy or sell at that point. Okay, so the market is random. That's why every moment is unique. Anything can happen at any time. Some of those big guys, those big market makers, maybe they're on holiday or something. And then your pattern presents in November or December, and then it doesn't move. You wonder, why the heck is this thing not moving? Trend line is broken or whatever. Maybe those guys are not there, or they just want to keep it in a range, or they've decided to change up things for that point in time. So anything can happen. Realize that when you enter a trade, it's not because, oh, all my rules are met, therefore price must go up. No, it doesn't have to must go up. It can also go down. Anything can happen at any time. Okay. And then remember as well, there's a random distribution between winning and losing. It's just like if you use a coin which is biased, which is weighted, a coin which is weighted to give you more, say, heads, then it will give you tails. Let's just say 60% of the time it will fall on heads, right? So if that coin, 60% of the time, it will give you heads, and then 40% of the time it will give you tails, right? You know that because it's the way the weight is distributed, isn't it? So it does not mean that every time you're going to get a head out of a certain number of coin tosses. It could come up with tails maybe 4 times or 5 times, 6 times in a row. It can give you tails 6 times in a row. Then you think, no, this thing here is giving me tails. When is it going to give me heads? So maybe the first 6 could be tails. It doesn't mean that you won't get heads. What am I saying? With the strategy, it works the same way, that you have a higher chance of winning than you do have of losing. But it does not mean that because your setup appears, you're going to have a result of a trade like this, win every time, because it's a setup or it's a signal, isn't it? You can have 3 wins, you can have more losses, but all you have to do is to present yourself to be available. So when the next time when it happens, your win comes in, isn't it? Your win comes in, because these trades, they are random, isn't it? They are random. But there is a different, it will not just be a winner every time or winner and loss. the order comes out differently, okay? But all you need to know is that in the long run, you will have more winners than losers, okay? So you don't need to know what will happen next to make money. This is the biggest thing, because many guys spend a whole lot of time trying to be certain that this next trade is going to be a winner. Just realize that if the signal comes, just take the signal. You don't need to know what's going to happen. You don't have to compete, like I shared in the previous video, to say, oh, this pair is going to sell, this pair is going to sell, this pair is definitely going to sell. Every pattern, I've checked it from daily time frame right down to the month, up to the monthly time frame, and down to the H1, and everything's confirming this is what's going to happen next, therefore I'm trading it. No. If your strategy says this is the signal, this is the setup, take it. You don't need to know for certain what will happen next. Just take it if the setup appears. Okay, so a strategy is just an indication of one thing being more likely to happen over the other. It is not a certainty. This is the main thing. It's not a certainty, but a probability. This is why some retail traders stay looking for a winning strategy, because they don't want to take an L. They don't want to take a loss. Part of being a good trader is learning how to take a loss and learning that there is a random distribution. Not every trade is going to be a winner. You can have a different order of how you get your wins and your losses. But realize all you're looking at is a higher chance of winning. If you've got that thing, you've got the, it's like you own the casino machine and you know that 6 times out of 10, I will be right, isn't it? Over a longer period of time, 6 times out of 10, I'll be right. So all you need to do is to know that with your strategy, you have got an edge over the market, isn't it? So every moment in the market is unique. Just because it happened last time, just because it happened last month or the past 3 times in a row, just because the signal paid does not mean this time the signal will pay. The market is random. Anything can happen. Anyone can decide to bid price up or push it down. You never know who is about to enter the market or who is in the market. Even even brokers who can see where trades are placed and all that kind of thing, they don't know when some client is going to come and decide to enter the market and push price up, and they don't know who else is waiting in line to agree with that trade or something like that, isn't it? That's why anything can happen. All right, so there's a random distribution between your wins and your losses, so don't be disheartened and don't become overexcited when you get a string of wins, right? You don't need to know what will happen next in order to make money. You just need to make yourself available for that. Strategy is just giving you an indication that something is more likely to happen in your favor. Okay, so what you need to know before trading, when approaching the market, what you need to know, that before you place that trade, you need to know that there's a higher chance of you winning. You don't need to be certain that this trade will be a winner and become now devastated if it turns out to be a loser. All you need to know is that there's a higher chance of this being a winner before entering a trade, because your strategy has given you that signal and you've seen that how people have reacted in the past, it's to your advantage, okay? And secondly, if not one of the most important, is having a predefined risk. This is what you need to know before you enter the market. So not just because the signal has come do you enter, but before you enter and that signal is developing, just before it develops, you should already know to say, okay, if this is what I'm seeing on my chart and I want to enter here, what is the gap here? What is my stop loss gap to say how long will I hold to see if this thing is going to continue up, right? So that's your cost of doing business and that's your stop loss. So you need to know how much is it going to cost me. That's why your position size before you enter and all that kind of thing, you have to have it pre-calculated and realize your margin, because it's not just by you putting a stop loss, your account can be blown if you over leverage your account. So realize how long can your account handle to hold, and what you need to risk in order for you to see if that trade will work. And if it hits your stop, you know, okay, this trade is not going to work. Even if it hits you and then comes back up, well, it violated your setup. Just let the thing go, okay? So your predefined risk, this is what you need to know. And you don't need to build a case to be certain that the trade will work. Many guys will overanalyze, try and make it as certain as possible that this thing will work. Just stick with the basics of your strategy, stick with the basics of your signal. If it presents, take it. You cannot move price. You can never be certain. You can never. If you were certain, and those people who say that they're certain this thing is going to buy or sell, they should sell everything they own and put it on that trade. And why is it that no one will do that? Because no one is certain that the trade will work. So you don't need to build a case to be right or to be certain. If that were the case, we would all sell everything we own and enter that trade so that we could make a killing on that trade. So you don't need to build a case or to be certain that the trade will work. You just need to wait for the setup and take it and know that anything can happen once you place your trade. Okay, so I hope this has helped you guys. Just a quick recap. If I just go back here. So how do you make money? You buy low, sell high, but what you see as low, someone else can see as high. What you see as high, someone else can see as low. Who controls the market? No one really. It's buyers and sellers, but we do have institutional traders that have got an edge over retail traders, that they can move price or manipulate price, the market makers, to try and get you to take a certain position. Then they take the opposite position of that, and they take out your stop and move. Right, patterns and probabilities. So the market does develop patterns. It does develop patterns which give us higher probabilities for entries. So when we trade with a probabilities approach, right? Let's have a look at that, where we know that every moment is unique in the market. The market is random. Anything can happen. There's a random order between our winning trades and losing trades. I don't need to know what's going to happen next in order to make money. I just have to make myself available for that higher probability setup and get out if it is violated, the signal is violated. Strategy is just a higher indication that I'm higher chance of winning than losing, right? What I need to know, there's just a higher chance of me winning. I'm not saying I'm going to win, but I must make myself available. That's why I predefine my risk, how much it's going to cost me to see if this will work. If it doesn't, then I'm out, right? And I don't need to build up solid evidence. As long as if the basics of my strategy say this is what will happen, I take it. And anything can happen after I place the trade. That's all you need to know. Okay, so I hope this has helped you guys, and I will be doing, I think next video will be the 3 types of approaches to trading, right? We've got what is more of like robotic or mechanical, not robots, but you dealing with yourself in that way, and intuition and all that. That's more advanced. But anyway, I'm just going to go over the different ways on how you can actually approach the market, the 3 different ways of trading the market, right? And then I'll get in further on the one which is best for technical traders and what I suggest. Okay, so happy trading, guys, and may the markets be with you.
Learn, then earn money online. You control your money. You control the risk and the reward. Start from as little as $10. Stop losing to get-rich-quick scams and pyramid schemes. Learn a legitimate skill of online trading. Already a trader? Stop donating to brokers. Become independent. Stop relying on signals and careless account managers. Learn to trade the market maker way. Take our course and follow the rules of big banks and smart money. Get wisdom. Get understanding. Get wealth. Contact MarketWise Traders today.